My name is Anthony Denier. I am the Group President of Webull Corporation and the US CEO, and you're watching Taking Stock.
Counting down to the close, everyone, you know what time it is. It is Thursday, July 30th, and this is Taking Stock. I'm Kristen Scholler down here on the floor of the New York Stock Exchange. We got a lot moving markets today, and of course a big day as tech is leading this rally after Microsoft delivered blockbuster results. Azure cloud growth hitting its fastest pace in 4 years, and investors now turning their attention to results after the close from Apple and Amazon. Well, right here at Intercontinental Exchange, we see headlines of our own. ICE announcing it's going to acquire electronic bond trading platform MarketAxess in a blockbuster deal. We're going to tell you more about that throughout the session, valued at about $6 billion and creating a larger fixed income marketplace, as the company also reported strong second quarter earnings. Well, it's a busy day, and we've got a lot to cover with our guest. Jess Inskip is going to break down the Fed's latest move. What's behind this market rally today? We'll talk stable coins, and Stephen Dickens of Hyperframe Research is going to pick the winners of this AI cloud race. The AI trade very much back in play today. We had seen a sell-off in stocks yesterday. The timing at least coincided with that Fed presser. However, we see stocks gaining today. And let's head up there to that closing bell podium as BlackBerry does the honors, wrapping up today's trading session here on Wall Street. Ticker symbol BB at the NYSE. We are officially closed for trade on this Thursday. What a week it's been. We had 2 IPOs today. And let's take a look at the tape. The S&P 500 finishing the session up 1.7%. The Dow Jones Industrial Average higher by 1.2%. And the NYSE Composite gaining 0.8% as the small cap Russell 2000 rallied 1.4%. A lot of green on the screen. And I'm pleased now to be joined by our first guest, Jess Inskip. She's Director of Investor Research at Stockbrokers.com. Jess, come on in.
Hello.
Great to have you here at the New York Stock Exchange.
Well. Yeah.
Let's break down what we need to know from the Fed meeting and the impact on yields.
Yeah, so this Fed meeting was very important because we're trying to get a baseline on Kevin Warsh and understand the picture. But what's more important than what he's saying, obviously he held, it's how the bond market reacts. So we saw some steepening on the yield curve, which tells me that the bond market agrees with him. But more importantly, the 2-year yield is still very elevated. I'm watching that level 4.2. If we're above 4.2, that tells me short-term inflation expectations are heightened. The 2-year yield hasn't come down since we've had this conflict with the Strait of Hormuz being open in this Iran, or being closed in the Iran conflict. That's the level to watch. Our interest rates, short-term inflation expectations very specifically, are they coming down with the bond market reaction? And to me, the stock market cannot go higher until that comes down. And that's geopolitical risk. Maybe earnings can overcome that, but the way that we look at that is the 2-year yield.
What did you make of Kevin Warsh's comments yesterday during the Fed presser?
So they leaned very dovish to me, but I do think that he's actually buying some time because he stole a portion from Powell's book, where Powell looks at one piece. He will not look at one piece of data. 3 pieces of data actually made a trend. That was Powell's trend specifically. He wants to look at more data, but he wants those task forces, but he also opened us up to looking outside of PCE, which we already knew. But what's interesting is a lot of analysts came out, they added more hikes on the table. I think that's a little bit difficult because I didn't hear him say anything about the continuation of oil being anything outside of a one-time shock, which is very important to me. And again, that points back to the activity that I see on the 2-year note. I cannot stress enough how important that is.
Yeah. So the next Fed meeting, right, is in September. We've got the rest of summer left, and then after Labor Day, we'll have a September decision. How does this set up the central bank to move in September?
Well, I think there's a really important level we have to look at. So if we were to go to June 17th, the low of that day was 74.02. If we look at the markets right now, we closed at 74.37. So that tells me we haven't the market is waiting on something. We've had these amazing, wonderful earnings. What Microsoft told us yesterday has reignited that AI story. That's what's helped us rally today. But if we look from month to month and Fed meeting to Fed meeting, we really haven't had any progress in markets. And we also haven't had any progress on that 2-year note. I'm going to bring everything back to that 2-year note because it's very important. But as long as we maintain that 74.02 level, I think that's extremely important. But it tells me there is still uncertainty within the market. I expect us to be range bound and it's going to be choppy. Expect increased volatility until we see that 2-year note retract, or alternatively, we see something with the Strait of Hormuz have some resolution. And it is a midterm year, so one would expect the administration would do something about that, but we'll see.
You're watching the S&P 500 Equal Weight Index. What is that telling you about the strength of this rally?
So this is very interesting. We're seeing the S&P 500 retract. We're seeing the technology index retract, a little bit reignited today, again, because of those wonderful earnings that we saw from Microsoft. The S&P equal weight has actually continued to hit higher highs ahead of the S&P 500. So what that tells me is it's a healthy rotation, it's a broad market. What we don't want to see is a mass sell-off out of every single sector into a safe haven like gold or even treasuries. But what we see is more of a rotation into other sectors, and that's actually a positive sign and a healthy sign within the market. So that's what gives me the reasoning that we are going to be in a trading range, is because there is the underlying other sectors that are propping the market up. We see earnings now and getting reprieve from AI with the positive earnings. We are feeling better about CapEx spend, seeing some ROI. That helps us get beyond that. So we're going to be like a trading range from floor to ceiling, if you will.
All right, floor to ceiling, Jess Inskip breaking it down for us here on Taking Stock. Jess, thank you so much.
My pleasure.
Great to have you.
Yeah.
Okay, everyone, let's take a walk here because we want to show you some stock standouts that we're following today. You can see down here on the floor of the New York Stock Exchange, we are talking a lot about Jersey Mike's and yes, Reformation as well, including BlackBerry, which just rang the closing bell. So let's go take a look at some of these stocks because they are officially open for trade, making their debut earlier here today. In fact, Jersey Mike's CEO, Charlie Morrison, joined me for an interview, and we're going to play that later on during this program. We'll hear from him about expansion plans and how he thinks the world can absorb 15,000 Jersey Mike's locations over the next few years. So clearly they have a lot that they want to break down. But we're going to take a look at some of our notables for now. So let's zoom in there. We got the Global X NYSE 100 ETF trading under the ticker symbol NYSX. Very good day for that ETF. Of course, it tracks the biggest technology and innovative names out there. It's top holding Microsoft surging following a blowout earnings report. Microsoft beating expectations on revenue and profit, while Azure cloud growth accelerated to 43%. The company also reported a record $41 billion in quarterly AI infrastructure spending. And Bobby, our cameraman extraordinaire, is going to move on over to Reformation. Yes, one of two IPOs here today at the New York Stock Exchange. That stock ending higher by 0.5 percentage point. Ticker symbol REF. They're going to be here ringing the opening bell tomorrow, in fact. The sustainable fashion brand raising about $211 million in its IPO and trading near its offer price as investors bet on the next phase of growth, including new stores, e-commerce expansion, and international markets. All right, well, we got a lot more to get to here. I mentioned Jersey Mike's earlier. I sat down with the CEO, Charlie Morrison, after the sandwich giant went public on the NYSE and rang the opening bell. A sub above is their motto, and let's take a look at that segment. We've got hundreds of Jersey Mike's folks here at the New York Stock Exchange for today's big celebration, and I am honored to be joined by the CEO, Charlie Morrison, here as the stock market is officially open for trade, and we celebrate this IPO. Charlie, congratulations.
Thank you. This is amazing. What a day. What a day for Jersey Mike's.
An incredible milestone indeed, of course, born out of the East Coast here, many people know, but across the country, 3,300 locations and counting. What does this day mean to you, and how did you get to this success?
Well, this is a big milestone day for Jersey Mike's. It's a culmination of 70 years of our history as a company, growing not only here in the Northeast, but all over the United States and around the world. And this brand enjoys great success, and it's all about the authenticity of our subs, the way we hand slice every single sub, made to order every single day, the care and quality we put behind it, that's what makes us unique.
What's your go-to sub order at Jersey Mike's?
Mine's the number 13, the original Italian, but you got to add the hot pepper relish. That's the only way to have it.
That is clutch, I hear. So tell me about what's next in this new chapter for Jersey Mike's.
Well, I think it's going to be a lot of the same. We've been growing this brand for a long time. In fact, we're the only brand that has 20 consecutive years of positive same-store sales growth, and we're growing again in the first half of this year. We're going to continue to put new units in the ground by way of our franchise partners who are anxious to get all of those stores growing now here in the U.S. as well as soon overseas. Our first location's in London, probably sometime later this year.
Well, that's very exciting. What does it mean to be joined by hundreds of people that represent the company here today?
It's great to have everybody here with us today. We have our franchise owners, our team members. These are the people who really make it happen. They're the ones who are working hard every day, slicing every one of those subs to order for our customers. They love it. We're having a good time, and we're going to celebrate this milestone together.
I'm sure you're very proud, in fact, of all of the work that's gotten to this point. Is that right?
Absolutely, very proud, very excited about the opportunity ahead. It's just one moment, but I'll tell you, this is going to be one that's going to be marked for a long time to come as a real transformation of this brand to the next level.
Now, as a public company, how do you intend to scale the brand?
Well, we already are doing an exceptional job. We have over 1,600 stores in our pipeline to grow with over the next 5 years. Those are committed, more to come there. And then internationally, just in a couple of markets so far, Canada is our first market, the UK coming up next. We'll be in countries around the world. We think the world has the potential for over 15,000 Jersey Mike's locations over time.
And how are you able to do that while still staying authentic, as you referenced earlier?
We're a brand that has enjoyed a 70-year history, and over the last 50 years under Peter Cancrow's leadership, we have maintained that which got us here, staying true to our roots, that authenticity our customers have grown to love about this brand, giving to give and back into the community. We're going to keep that going for a long time to come. You won't see much change.
Okay. What else is in store today?
Oh, it's a busy day. It's a fun day. We've got a beach set up out front and in front of the stock exchange. We're going to have a nice party, celebrate this moment, and then get back to work after today.
I do love the beach vibes indeed, and even kind of a boardwalk theme out there, right?
It is a boardwalk theme, sand out there, everything, beach balls. We're going to have a great time to celebrate.
Well, it's been a really fun takeover here at the New York Stock Exchange. Charlie Morrison, CEO of Jersey Mike's, joining us as we await the first trade. This stock will begin trading under the ticker symbol JMKE. Charlie, thanks again.
Thank you. It's a great day. Thank you so much.
All right, everyone, we're down here on the floor of the New York Stock Exchange. Joining me now to talk stablecoins is Eric Queetham, he's CEO of Velocity. Eric, welcome.
Thank you. Thanks for having
me. Down here on the floor of the NYSE, your company recently raising $38 million to focus on stablecoins. What more can you share?
Thank you. Yeah, it's an exciting time at Velocity. We're still a very young organization, but it's in the name. We're moving fast. We did just close a $38 million Series A, led by Dragonfly, Firstmark, lots of great other investors, including QED, Coinbase Ventures, Capital One Ventures, joining the round as well. And so, yeah, it's a very exciting time for our organization. We're really doubling down on what we set out to build, which is the first institutional platform that's ready to move money for global CFOs and treasurers.
Mm-hmm. How are you going to deploy this fresh capital?
It's a good question. I think, for us, we've been, on a very aggressive pace of building the business. And so this really allows us more flexibility to double down on expanding into new markets. We're a regulated business, and so getting licensed around the world and having the ability to support lots of different markets and depth of liquidity for our customers is really important. And so we'll be deploying a lot of it in global expansion and really accelerating the core capabilities that we've been building over the last year.
Mm-hmm. Now, what I like about this is the investor list includes Capital One Ventures, marking their first on-chain investment. How significant is that to the industry?
I think it's really big, right? I think a year ago, a lot of people were still asking, are stablecoins safe? Is it something that as an organization we can get comfortable with? And I think the question has now moved to how do I use them? And so, yeah, it's fantastic to have Capital One Ventures on the cap table, and we're very excited about kind of their strategy in the space and what they're doing.
Who do you find is adopting stablecoins?
I think anyone who is moving money cross-border, anybody who has a multinational lens to their business is really keen to use stablecoins to enhance what they're doing in the fiat world today.
Interesting. And what is driving that momentum?
I think for a lot of people, we're going through a cycle of AI adoption, and I think folks are starting to think about how they get more out of their business, and that goes from a capital perspective as well. I think a lot of folks have been trapped in a cycle of what's possible on fiat rails and are now learning that capital can move differently, and there's a huge opportunity to take advantage of those capabilities with stablecoins.
And I see that you believe every consumer payment will be backed by stablecoins. Talk to me more about that.
Yeah, look, I think we've been in this ecosystem for a long time, which has been really focused on the consumer experience and what a consumer gets out of a payments. But behind the scene, there's a lot to happen. Money moves from issuers to networks to acquirers, and acquirers to merchants. And every step along that value chain, there's an opportunity to enhance what happens. And I think in order to get to a real-time system, which is the system that should exist in the world today, I think stablecoins are the perfect capability to deliver that.
What's next for Velocity?
What's next for Velocity? I think it's back to work, right? There's a great quote by Kobe Bryant in one of the playoff games where they went up 2-0, and the reporter says, "You're not happy. What's going on? Why aren't you smiling?" And he said, "The job's not done." And so for us, we got a lot of work to do. It's back to work.
All right, back to work. Very good, Eric Creetham, CEO of Velocity. Thanks again for joining.
Thank you.
Great to have you. All right, everyone, stay with us because we're going to take a break, but we'll be right back with more Taking Stock on the other side. Welcome back, everyone. We're down here on the trading floor, and I'm pleased to be joined by Stephen Dickens, CEO and Principal Analyst at Hyperframe Research, to talk about these hyperscalers and raw compute capacity, plus a whole lot more. Stephen, welcome.
Hey, thanks for having me on the show.
It's great to see you here on the show today. I want to talk about what position these hyperscalers are in when it comes to raw compute capacity.
Well, I think the big number we've got Amazon reporting after the bell. The big number I'm going to be looking for from those guys is CapEx. We saw it earlier on in the week with Microsoft and with Google in their earnings. I think that why Microsoft ripped and Google didn't is just literally CapEx commitments. And I think this raw compute is going to define where Amazon sort of lands after the market. whether they sort of stay the course on where they were with their capex projections, or whether they increase those like Google did. I think that really defines it for me.
Interesting. Now, a lot of these hyperscalers, if you will, are building out their own chips. What is the status of that, and what does that mean for a company like NVIDIA?
So I think I don't see that as a either or. I see it as a both and. I see, particularly with Amazon, they've had Inferentia and Trainium and Graviton. We're seeing those frontier labs start, like the OpenAIs, and really looking at investing, and I think that's crucial. But I see that as, whilst the training is going to happen predominantly on those frontier lab environments based on NVIDIA, we're going to see some inference there as well. But as enterprise inference starts to play out, and that's where the biggest part of the market, whether that's 10, 15, 20 times bigger than the training boom we've seen already, that's where the custom silicon that the likes of Microsoft, Google with TPU, and Amazon with Graviton and Inferentia, that's where that's going to play out.
How fast are you seeing the evolution from AI assistants to autonomous agents?
So that's the big pivot we're seeing. That's all the news that we're seeing coming out of these guys. I think really that's going to be, I'm starting to play with Amazon's Quick tool that they launched a few months ago. So the launch of that in San Francisco, starting to become indispensable. I think those agentic tools and those frameworks, I was chatting with Perplexity earlier on in the week, those types of tools, those agentic harness layers, that's crucially where the next wave's going to be. So, and that's related to what I was talking about a few moments ago, that wave to inference. Inference is the use of those agentic tools. So that's where the market's going, and that's where that huge build-out's coming from.
What's the status of old-fashioned cloud migration these days?
So that's happening as well. We're starting to see, we're seeing some workloads come on premises again. We're starting to see a repatriation. You know, some of the names I'm seeing there, the HPEs, the Ciscos, the Dells, IBM even, those repatriation for sovereignty reasons. Where do I want my data? The macroeconomic climate's playing into that. But we're still seeing people put certain workloads on the cloud. We saw Google this week announce 82% cloud growth, Microsoft up in the 40s. I'll expect we'll see the same from AWS, with those guys growing in the 40s, mid-40s. So we're starting to see both repatriation with the names like Dell. They've ripped this year with some of their growth, but also seeing that cloud piece play out as well.
All right, Stephen Dickens, thanks so much for joining us here on the floor. Such a topical conversation.
Fantastic. Thank you for having me on the show.
Great to have you. All right, everyone. Well, we're going to take a quick break, but we will have more Taking Stock on the other side. Welcome back to Taking Stock, everyone. Earlier this week, Money 2020's Scarlett Sieber sat down with the Wall Street Journal's Caitlin Ostroff to discuss the prediction market boom. Let's take a look at that.
Welcome back to Taking Stock. I am Scarlett Sieber, Chief Strategy Officer here at Money 2020. And I love this interview that we're doing today because we're going to flip it on the edge a little bit. We have Caitlin Ostroff, who is a reporter from the Wall Street Journal, joining us. Caitlin, thank you so much for being with us.
Thank you for having me.
The team is so impressed with the work that you've done over the years. We're really, really excited to hear from you. Of course, you've been covering a lot of the prediction market boom with companies like Polymarket, Kalshi, etc. I'm curious, from your perspective, Caitlin, what does this mean about the industry and how they understand and perceive risk today?
Yeah, so the prediction market industry has ballooned over the last 2 years. It was really, mid 2024 to around fall of that year that you started to see interest in them just turbocharged, in large part because the presidential debate after which Joe Biden dropped out and the general election outcome of that year, you saw prediction markets as an early signal of what would be happening in the future potentially. And so these markets have just grown so much. You have sports betting, you have trading on what company earnings will look like, you have elections markets. And so they have become this new source of information for both investors in the broader market, but also everyday people.
Yeah, and it's interesting that you're saying that. It is both the investors and everyday people, and we're sitting here at the iconic New York Stock Exchange, and we're definitely seeing more institutional interest in these regulated prediction markets. How do you see that kind of shaping the credibility and utility of prediction markets moving on? And for everyone, for policymakers, for investors, for everyday people, what does that look like for you?
Yeah, so institutional investors are always looking for the next potential signal, like any that they can. I mean, several years ago, we were having these conversations about Wall Street Bets with Reddit and that giving institutional investors signals for trading. Prediction markets is sort of, the next new data source that investors are looking at. And so, you have investors looking at it for sentiment of, well, what is the money saying about whether we're likely to have a Republican-controlled Congress or Democratic-controlled Congress in the next session? And institutional investors are looking for opportunities within that, not just for sentiment, but also for trading themselves. And so you've seen, kind of like the initial wave of interest of institutions in these markets. You have Susquehanna, which does trading on Kalshi for market making. And there's certainly a desire for other institutions to go in. I think the main thing that I often hear from institutional investors is, these are not insanely large markets. They definitely look big relative to what most people have in their bank account or their 401k. But if you're a large investor, you want to make sure that there's enough trading happening that, you can kind of go in and out of positions easily. So I think there's a lot of questions at the moment of how these markets develop and what opportunities that means for institutional investors.
That's so fascinating. And we look back at the work that you've done. You really have a great history of connecting the dots between market behavior and geopolitical pieces, technological shifts. You talked about Reddit, Wall Street Bets, etc. How are you seeing this convergence of traditional finance and decentralized finance? How is that playing out for you?
Yeah, I mean, you have, again, investors are looking for any signals that they possibly can. And whether that's looking at crypto prices, whether that's looking at crypto products, whether that's, internet forms, they're really trying to look at everything they possibly can. And you have everything sort of like coincides, so nothing is ever an isolated bucket. I mean, one of the things I've noticed in my own reporting is I will cover crypto, but it's also geopolitics and it's technology and it's markets and it's all of these other elements kind of all combined together. And so being able to look at, pricing, how people are betting on whether a geopolitical event will happen or what technology that betting platform is built upon, these are all things that investors look at for clues on what should they be planning on, what are the outcomes they should be prepared for, what tools should they be investing in from a technological standpoint. And so, really it's everything kind of all together that, that I'm looking at, but also that investors are looking at to understand what is the world going to look like tomorrow or a week from now or next year.
Thank you so much, Caitlin Ostroff, reporter from the Wall Street Journal. In the meantime, back over to you.
All right, everyone, that's going to do it for our show. I'll be back here tomorrow, same time, same place. We'll talk more about Reformation's IPO after its opening bell in the morning. Thank you, as always, for watching. We'll see you on Friday.